Welcome back to another video. Today we are diving into something super important, trading volume. It's like peeking into the market's heartbeat to see what's really going on. Let's take a look at what volume actually is. Volume is just how many trades happen in a certain time. Whether you're into forex, stocks or crypto, understanding volume is a key. If you are looking at the crypto daily chart, this volume rectangle shows us how many coins were traded that day. In stocks, it shows us how many shares were traded, and in futures, how many contracts were made that day. If the volume is green, it means that our candle closed above opening price. If it is red, that means our candle closed below the opening price. So why does volume matter? Well, when lots of trades happen during an uptrend or downtrend, it means there's a real action, confirming the trend. But if volume drops while prices move, it's like losing steam, hinting that the trend might slow down or even flip. Let's take a look at this chart. The big candle has been made indicating an uptrend, but look at the volume now. This indicates that in this specific day, not so many people were involved. This shows weakness and there is high probability that the price will drop. Volume also helps to confirm breakouts. Picture this. The stock breaks a big resistance level. If that move comes with a volume boost, it's like stamp of approval, making the breakout seem legit. In short, volume shows interest of people, liquidity, strength of the move, or whether something is buying or selling. Small volume indicates a reversal of a trend, and high volume confirms the trend. So, next time you are checking those price charts, keep an eye on volume bars below. They might just tell you where the market is headed. That's all for today's chat. If you like this video, give it a thumbs up and subscribe for more educative content. Until next time, happy trading!